everybody. This is Sam. He is one of the coolest lenders that I know. He's helped me out before in a transaction. And the reason why I love this guy is, at least in my opinion, if you partner with a good lender like Sam, he's someone that makes your job so much easier. You know, I didn't have to keep calling and checking up on him. He was the one calling me, letting me know what was going on with the loan and pretty much handling everything before anything even became a problem. So Sam is here just to talk about, lending, the process, any other thing that could help us out as far as realtors go. So Sam, if you want to, kind of tell about yourself and then take it away, brother.
Sure. Well, thanks for the introduction, Joel. Definitely getting guidance from a great agent there for sure. So y'all are in the right place, and I'm going to be brief today. I brought a few things that I was going to share. Oh, let's see. Shoot, Joel, I might need you to help with the slides really quick. It's not letting me on my screen.
Oh, gotcha. I'll go ahead and try to get this going for you.
But I guess first and foremost, just with Amina and Sarita, how long, just out of curiosity, how long have you guys been in real estate? Just to get to know you a little bit, and I guess how you liking it so far?
So I've been in real estate for about a year now. I like it. I love it, actually. I really, really love it. I'm currently working a 9-to-5 on top of it. So it's been challenging, but I feel like it's worth it. So I'm hanging in there.
Awesome.
Sarita here. I go by CC. I've been licensed for 3 years. I only had one transaction under my belt, which was my own. Settled in September, moved in my house in October. So that was a pretty easy process, aside from having to talk about real estate 24/7 with my wife, because, she was a client 24 hours a day. So it was a good experience to have her as my first client, though, because I got to see, what that nonstop communication, even though I will have breaks in communication with normal clients, but it was good to have that nonstop communication, so I can just see, get a taste of what other clients may be like when they're texting and calling after 8 p.m.
Sure.
But it wasn't a terrible process, aside from, the market just being crazy and trying to schedule to see houses, and our appointments got canceled before we could even get there because they accepted an offer. And then, of course, we did put an offer on one house, and someone was offering thousands of dollars more. We all know that that's happening a lot right now. We ended up going with new construction, and we are 100% happy with the home we have. So now that I have that transaction under my belt, I'm really opening up to accepting other clients. And I'm a dual career agent. I'm a licensed esthetician full-time. And so it's nice to have a client base where I can, network and talk about buying and selling homes with an already established clientele that I have.
Right. Yeah. Hey, it sounds like you got it made. Well, that is awesome. I'll briefly just kind of go through. Thank you, Joel.
Mm-hmm.
A couple of quick slides. And if you guys have any questions on these, you're like, what the heck is he talking about? Let me know, because I'm just going to go through kind of a few cool things that we're doing at Fairway right now. And then I'm going to open it up to questions, because I know everybody's got their lending questions, and I am happy to answer any and all questions. A little bit of background on me. So I've been with Fairway, I've been at LO since 2019. So similar to y'all, since I've been in it, it's been a bit of a crazy market. It's a little bit of 2019 was normal, but since then it's been a roller coaster. So I'm in the same boat kind of as you guys, as, few good years of experience, but still obviously eager to keep rolling and keep learning. So that picture right there is of a picture of our team. There's 6 of us that are licensed, and I think that's the coolest part about working on a team is we cover for each other, and we're all kind of experts in our own little niche, and it helps because we have people to rely on for answers, which is huge. And so the big thing for us and for me especially, we want our clients first and foremost taken care of like friends, and we want them to understand everything on the numbers side so that when they are in the car with you, Cece, when they are in the car with you, Amina, they know, look, if I make an offer on this house, I know I'm going to be paying this much every month, and I know I'm going to be coming out of pocket with this much for a down payment and all that sort of good stuff. So their guard's down. So that's our big thing. I mean, we're licensed in most of the Southeast, as you can see. And then our biggest thing, we close our loans on time, under budget, no surprises. So this is one of the coolest things that I have seen since I've been at Fairway. I know you guys were talking about crazy competitive market because it is. I mean, we all see it. I mean, I know you guys see it more from your side, but it's, just as tough from the lending side to try to, call on list agents trying to get offers accepted, this pre-approval won't work or whatnot. So what we came, I guess I'll say part of but Fairway came up with is a cash guarantee. So what this is think of it like you send your buyer our way. We have them go under contract without going under contract. We collect all their income documentation, all their asset documentation that they would need for a loan, and we send it in to our underwriting team like they would be going under contract to get a legitimate loan approval. And from there, we have to have everything signed off on for the buyer. So if there's any questions, those need to be answered. And once those steps are taken, we are able to write a cash guarantee addendum on your contract that, as you can see on this flyer, it's a cash guarantee for the seller. So if for any financing reason the property falls through and it's not able to happen, Fairway will step in and buy the house in cash or allow the sellers an option to take $10,000, from Fairway and terminate the contract. If that happens, what Fairway will do is they'll partner with us, most likely that agent will be a representative of Fairway to list the house on the open market. Of course, that's never the goal. Fairway's not in the business to buy houses, and we want to obviously 99.9% of the time it will close quickly, on time and with little stress because the borrower has all their lending conditions signed off on. So I've been preaching this lately. I mean, it's not for everyone, but for the borrower, that is losing out on a bunch of offers, it's definitely worth a look. And another thing that we've been working a lot with lately, I don't know how familiar you guys are with Ribbon, but essentially what Ribbon does is it gives appraisal protection. It does a couple things and it has a couple uses, but I like to, use it as or sell it as appraisal protection. So essentially what you do with Ribbon is you put someone in the Ribbon system, you put their pre-approval in there, the lender verifies the pre-approval, and then you put in the house that you want to make an offer on. Ribbon has appraisers on their panel. They will determine what the value is on the property that you're going to offer. Now, in this example, we can use this example. Now, this property is $290,000. You put your buyer in the Ribbon system, and you put this property in the system, and Ribbon says, look, we pay $310 for this house. So what you are able to do is write an offer at $310, going over list, without the concern of a low appraisal, because Ribbon will write a check if it comes in lower than that. So say it comes in at $300, so still $10,000 above list. Ribbon will cover you on that $10,000, and it will be put on the CD as a check from Ribbon. Now, definitely disclaimer and a question I get on this all the time. There is a 1% fee of using Ribbon if you are able to close, and Ribbon doesn't have to buy the house, but you need to put 2% of the purchase price in deposits to be able to use Ribbon, and at closing it turns into 1% of the purchase price for that appraisal protection. So in this instance, if the appraisal came in at 310, you know, the borrower's paying $2,900 to use Ribbon and have that covered rather than coming out of pocket with that $10,000. So those are two, you know, unique things that we do. Another cool thing that we do with our branch in Charlotte and in Concord, we've got about 60 people, and we've been putting on master classes once a month. You know, would encourage you to check out our Facebook group with that QR code, and I can send these slides to you guys after you're done. We would love to have you come out. It's from 10 to noon. I believe our next one is on the 17th of May at OMB in Charlotte. Free food, free drinks. That's why I go. No, I'm just kidding. And it's just good content. Last month, we had an appraiser come out and answer questions from agents. We had a Ribbon rep come out, explain that, you know, just iron sharpens iron. So we're having elite people come in and talk about the problems that y'all are seeing every day, because, you know, anything we can use right now in this market is key, of course. So that's all. You know, I was going to share, this is my information. If you ever have any lending questions, I would love to be a resource. And I would love to talk to your clients about what their goals are and how we could help them. Of course, we, you know, at Fairway, we offer the same loan products that almost all retail shops do. So standard, conventional, FHA, USDA, VA, jumbo loan products. I guess, do you guys have any lending questions that you have wanted answers to lately? I'll kind of open the floor and let y'all chime in.
So Sam, I have a question. I know, I guess it's just so we don't step on any toes at how you prefer it. I know some of my clients, sometimes they ask me a lot of numbers questions about, you know, mortgage, you know, should I do this with this loan, or should I take off this car payment? Should I, you know, all this other stuff. I feel like that's not my lane. I like to give that to a loan officer just because I feel like it's your lane. What are your thoughts on that?
I would agree, especially if you're talking on things like credit and, you know, credit and income. I would say for sure lead that back to the loan officer, because they know best in terms of all the nuances of their situation. I would say, you know, it's important to be dangerous enough with the loan products to speak knowledgeably about it with like down payment. Like if somebody came to you and said, you know, I'm a first-time home buyer, do you know what I need to put down? I mean, I would totally have, you know, let you know that it would be totally fine to say, yeah, 3% for a conventional loan, 3.5% for FHA. I mean, I don't think that's out of bounds at all. But when it gets to, you know, specific scenarios, yeah, I would lead that back to the loan officer for sure.
Gotcha. Makes sense.
Yes. No questions? No common things that you wonder when you have clients and they say things to you like, hey, I'm qualified for this and I can do this. If not, no worries. I mean, take down my contact information and I'd be happy to help. Not an if, but when that time arises.
So I guess I have another question. So saying this hypothetically, knocking on wood, because I don't want it to happen. But say if, we're working with you on a loan, the appraisal comes back lower than I would like. What would those steps be like for, I guess, for me to try to fight that? Would I go ahead and contact you, or how would I go about fighting that on your end?
Great question. Yes. So, hopefully the lender would reach out to you first, and, give you the steps. But when an appraisal comes in low, the first thing that we do is we call the buyer's agent before the buyer. And I say, hey, Joel, this came back a little light. I'm going to send you the report. If there are comps, you use to comp this house when you put the offer in that aren't on the report, send them to me, and we'll send them back to the appraiser and try to justify having them added. So that's normally how we go about it. We'll also dissect the report, see if there's anything like time adjustments that might be off, or square footage that might be a touch different to help bring a value up. And from there, we send in a reconsideration of value to our appraisal board. That normally takes about 2 business days to come back. And at that point, we get a firm answer kind of on what the value is there.
Gotcha. Makes sense.
I will say it's more difficult for government appraisals. And another thing I would add is you can't jump ship on an FHA appraisal because the appraisal follows the property. Whereas I know conventional, sometimes if you have like a 60-day time frame to close a conventional loan and you get a bogus appraisal in, you're like, dude, there is no way this should be coming in 50 grand light. And you switch lenders and get another appraisal. We've had that happen. That's fine. That's totally legal, fair game and whatnot. FHA, you cannot do that because the appraisal follows the property.
Gotcha.
Just a heads up to throw that out there.
Makes sense. And then I guess another question, because obviously I want to win as many offers from my clients as possible. I have things that I know that work to get clients under contract on homes. I know you see, successful offers all the time because, you have to look at them. What things have you noticed or seen that have been winning offers lately?
I think the important things are terms and pre-approval are more important than they've ever been. I would say the first thing I would say to that is not all pre-approvals are created equal, in the sense that you can tell, I bet you would, contest to this. You can tell when a loan officer is involved or not, and it matters. And you could definitely say it from the listing side. So what we've been seeing a lot of success with is when our people submit offers, we will call or text every list agent that they submit an offer on, just to let them know we're involved, we've looked at everything, and this will close on time. So I would say, making sure the pre-approval is sound from a reputable lender is the first most important thing for your client. And sometimes it takes losing a couple offers to convince them to kind of look, look elsewhere, I would say, without trying to step on toes. And I would say the second, probably biggest thing that I've been seeing is just big deposits. And it stinks because it creates more stress, but, throwing the money up front is it's very advantageous to sellers to see that, hey, look, your buyer's willing to toss 10 grand in. First of all, they believe in their financing. Second of all, even if an appraisal comes in low, the likelihood that they're able to walk away is small, or want to.
Gotcha.
Those two things have been big, I would say. And another thing I would say is, somebody talked to me about this last week. People have been submitting 2 offers on the same house. So if you have a client who's, who really, really likes this house, but is a little wary about going over, you would say, look, Joel, there's like 25 offers on this house, I promise you. So if you want to win this, you're going to have to go 25 grand over. What you can do is you can write an offer like your highest and best, right, with a lower sort of deposit total and maybe a slight, I don't like no appraisal addendum, any of that. And then you could write another offer, maybe 30 grand less with an appraisal waiver and higher deposits to give the seller two options. Because sometimes a seller doesn't need the highest and best. They just, they want something more realistic with higher deposits. Those are a few
That
things
makes
I've been
sense.
seeing.
I like that. That makes sense. Shoot. And then I guess another question then, loan to value, because I've seen this a couple times. Say if I have a client, 80% loan to value. And if the appraisal comes in a little bit short, how hard is it to finagle that where, instead of we're at 80%, they're only gonna put 90%. I mean, only do 10% down so they can take that extra money to put towards the appraisal gap.
It's not hard. It's really not hard at all. I'm actually doing one right now where the purchase price was 430, appraisal came in at 410. And the way we structured it was originally putting 20% down, now wants to put 15% down. Cash to close went down by $2,000 and the monthly payment went up by $10 a month.
That's not bad. That's not bad.
Because what you do is you go 15% down and then you buy out the mortgage insurance at closing.
Yeah.
So it's only $1,400. So no, when a buyer has 20% down, you can be a bit more aggressive on the appraisal game, because even if it comes in a little light, it is not the end of the world.
Gotcha. Makes sense. Oh, yeah. Well, shoot, Sam, I won't hold you too much. Anybody else have any questions
problem,
or anything
man.
like that, or?
How about your buy down points? Do they have like a way that you can buy down points? Like if one of the clients wanted to, well, if they came in at like 5.25% interest rate and they wanted to get it under that, could they buy down? Okay.
Absolutely.
Okay.
Yes. Common question. They can buy down. They can credit up too if they want. So yes, that is. And we review all those options, with a client after we review their initial application. We send them everything and kind of run through that. But yes, sure.
Okay, so if it was like down payment assistance and all of that, you would go over that with them as well if they qualified for it. Okay.
Yes. Yep. And we do have a couple down payment assistance programs that we commonly use that are run by the state of North Carolina that are fantastic programs for the people that qualify. I normally don't like coming out of the gates with that because it's a smaller box to fit in. But if you qualify for it, yeah, it's a great program, offers $8,000 towards down payment and closing costs. We've done a bunch of those this year.
Okay. Thank you.
And I guess piggybacking on what Amina asked, with the rates going up, are you seeing that as a trend, people trying to buy it down, or what are you seeing more of?
No. And the reason I say no is because I'm not advising that at the moment. And the reason I'm not advising it is because I feel like the writing's on the wall in terms of rates. First of all, I only think they can go up so high before the Fed has to step in and cool it off a little bit to, make sure the housing market stays afloat as a whole. And secondly, I think all signs are pointing to an economic slowdown within the next year, at which point naturally rates will fall because they'll want to, stir some growth in the economy. And so the payoff period for points is usually about 5 to 7 years. So from, after your 50 whatever payment, however it ends up to be, at that point it makes sense and you're saving money buying the points. And right now, I'm saying, look, I know these rates suck. Trust me. I get it. But you're not going to have this loan for 30 years. Let's be honest with ourselves. I'm going to call you in a year when rates are lower, and we'll get this all squared away. But once you pay points at closing, that money is gone. So think of what you could do with that $2,300. I mean, shoot, you could put a nice flat screen TV in that new house for $2,300.
Nice Samsung, exactly.
Yeah, so it's in flux right now, man. The market's crazy.
So I guess another question, piggybacking on that then, and then I'll let you go, I promise. So
you're good, man. We're at time.
I'm, obviously, I'm a realtor. So when I say it, it might not have, or when I advise on things or talk about it, it might not carry as much weight as it would carry if you talk about it, because you're a lender, you deal with numbers all the time. I've seen a lot of people lately saying like, hey, I'm gonna wait on buying a home until the housing bubble it pops and then the prices of homes falls down. Obviously this is all speculation, but what do you feel is gonna happen? Is there a housing bubble that's gonna pop? Are prices gonna crash? What are your thoughts on that? And again, all speculation, not holding you to it, just your thoughts.
I don't think so, but I think it's going to slow down, but I don't think we have a bubble that's going to pop. There's not enough inventory for that to happen. And I think, when people talk about that, I say, don't think so macro. Think about Charlotte. Real estate is that way in the sense where half the battle is the location of where you bought in terms of appreciation. And I don't see that slowing up. Or I shouldn't say I don't see that slowing up. I don't see that popping and falling. I see it slowing up, but I don't see it going negative. Like some people think, oh, I'm just going to buy this house when it's $60,000 cheaper in 8 months. I'm like, if that's your goal, I don't think you're making the right financial decision. I mean, some people just aren't ready to buy. They don't have the money saved or whatnot. And in that case, I'm like, yeah, man, I would wait. Or, just got to a new job and wanted to get settled. I get it. But if you're ready to roll and you're just waiting because you think a bubble is going to pop in terms of prices, that's where I'm like, no, get in the house because you can always change up the financing next year if the rates drop. But you can't buy a house at a discount like that.
Gotcha. That makes sense. And, just to make sure I'm on the right track, because I think I'm tracking with everything you're saying. When you're talking about, you think it might slow up, in my mind, I think for instance, I sold a home last year or helped somebody buy a home last year. It has appreciated $80,000. That's, in my opinion, that's a whole lot in 1 year. I feel like going forward, it's going to still appreciate, but not at 80 grand every single year. Is that what you're referring to or something different?
Completely. Yes. Nope. That's exactly what I was referring to. It's not healthy. Let's just say it how it is. I mean, it's not a healthy market. So I think it'll come back down to the, 4% a year mark within the next few years. Rates will settle up, mid fours again. And we might be able to breathe for a couple months.
Gotcha.
Until who knows what happens.
We'll see. Awesome. Well, Sam, I definitely appreciate you. Amina, any more questions before he goes?
No, I'm good. Thank you, Sam.
Awesome.
Of course.
Sam, you are the man. Said what, brother?
I said keep at it.
Oh yeah.
Y'all are doing great. It's exciting to see what you're doing, man. So
I'm trying to get to Joel's level. So hopefully
I know.
I can get to
past me. You got me beat. No worries. Definitely no worries.
Well, hey, just work hard and talk to every single person you see. And soon enough,
the person who helped change my tire
your car
today.
is going to be your client. Exactly.
Exactly. Oh man. Well, again, Sam, thank you again, man. And I guess I'll talk to you probably sooner than later, brother.
Of course, man. Sounds good. I will try to get out of here.
Oh yeah.
Having a Zoom malfunction.
You all good.
Oh,
Well,
I had to stop share. All right. Be good, y'all. Thanks.
all right, y'all take it easy. Have a good one. See ya.